Hey, welcome to the Closing Beat, everybody. Happy Friday. How you doing? Hope you're having a good day out there. Everything's going well. This is a quick show that we do. We call it the Closing Beat. We just go over the stock market, the good, the bad, and the ugly for the day. We'll cover all kinds of good stuff here for you today. And we're just doing a recorded version today. We were thinking about doing this on Fridays anyways, so we can maybe just kind of get everybody done for the day. Hope you enjoy. And if I do help you in some way, maybe you'll check us out at jazzwealth.com. It is Friday. That means we got to announce the Guess the Dow winner. Our winner this week is Bruce Hughes, not a customer. The guess was 25578.23. Bruce, you were the closest without going over, which was an interesting week for that to happen. Congratulations. We owe you a $100 gift card. One of our local clients, Edward T. I won't say your last name there, but he's a local guy here with us. You just got edged out by Mr. Bruce Hughes. So try again there, Ed. Anyways, congratulations there, Bruce. And so we'll get you out that gift card. Nice. If you want to take a guess, you have until tomorrow at noon to guess for next week. Otherwise, you got to guess for the week after. But hope you'll take your shot. No strings attached. You're welcome to play along if you want to win $100. Jazz artist of the week is Dave Brubeck, and I waited all week to share this one with you. Take 5. Come on. The most common song he's got out there. Just kind of a good laid-back song in 5-4. Hope you enjoy that one there. If you take a look at the stock market off to the right, there you go. You got the Dow as the strongest gainer on the day. The Dow out of the major indices there. Strongest down 10% year to date. Boeing helped it out today. So Boeing helped the Dow outperform just a little bit there. And we could just go over this. Let's just take a look. So if we go over to Boeing here, here's what you had on the day. Boeing just kind of stopped its decline, gave it a little bit of a bounce there as people looking for that dip buying activity. You didn't see that in the stock market. In fact, today, even though the stock market was up, the stock market was a weaker move than historical average. I'm actually going to share all those stats with you here in just a little bit to show you how, although today was up a little bit, it was actually much weaker than expected. But if you look at the Dow, that one helped to be one of the stronger performers. It was a little bit better than the other indices because of Boeing helped kind of lead the way there. You look at the NASDAQ and the Russell. There you go. The NASDAQ was the weakest out of the group, although it still had a good day. Slight up day there, back to the 20-period moving average. Overall, not too bad. Can't complain. If you look at the S&P 500, here's the thing. You had kind of a sell into strength versus buy the dip mentality. So think about that for a second. We have the markets that fell rather sharply. What have we all been wanting? We've all been wanting a dip in the market to buy the dip. Well, the market started dipping yesterday. Nobody came to buy yesterday. We know that. But today, every time the market tried to rally, in fact, there were sellers into that rally versus people saying, I will buy the dips. Let's check it out. If I go over to a 5-minute chart here real quick, just because I can. Here's every attempt at the market to rally today. So we started off the day a little bit higher. Of course, overnight session was really strong. And then we start by opening up the market. And instead of people getting excited and saying, okay, I'll buy that dip from yesterday, everybody else seems to be doing it. Instead, they sold. All morning long, we had that sell-off, and any attempt at a dip buying rally was met with more selling until we got to the end of the day. Who knows? Maybe if the markets continued, maybe this would have produced a sell-off there as well. So when you look intraday, you really got a sense that this was not a day that people were excited to buy the dip, unless you're like a day trader or something like that. If you look in the NASDAQ, since that was the underperformer today, it wasn't a bad day, but I'm actually going to mention this a few times. It's like for every stock that helps support the index or the sector, there was one that dragged on it, right? That's the kind of day it was. For every one that was pulling this way, there was another one pulling this way. It wasn't bad overall, really, if you're just looking for an up day. But Netflix held back the NASDAQ there just a little bit. Amazon held back the NASDAQ only down 0.5%. But when you start looking at these names like Intel down 0.5% as well, some of these are bigger weighted names in the group or in the S&P as well. And of course, tech sector and communication services and all that. And so these were kind of drags overall. And it offset the strength that you see in names like Apple, right? Apple almost had better than 1% gain on the day, but it didn't really help, right? Some of these other stocks just dragged it down there. Anyways, we'll get into that a little bit more when we look at our sectors here in just a little bit, but I want to share real briefly, we'll go over to performance of the market. You know, yesterday we lost 5.89%. Ask yourself, is that normal? Do you think a 5.8% loss is normal? It is not normal. Thankfully, it's not normal. But what happened is it's actually quite a rare day. And anytime there's a rare day, a rare event, we run a bunch of studies and see what happens. I'm not saying this results in forward performance or changes anything, but it's kind of interesting to take a look. So here's what I'm going to do. I'm going to put on the screen something that we're going to be sharing more in our membership site as that comes up, hopefully 2 weeks, maybe be out and available. This is kind of data and research that we want to bring you to help you come to your own decisions, of course, and learn a little bit along the way. Here we go. So if you look over performance on what I consider a pretty rare day, the stock market yesterday lost 5.89%, as you see up here. What we did is we took every 1 day loss of at least 5%. We had to go back pretty much 70 years. In our notes from Jazz email, by the way, I highlighted, why do we always stop right here, 1954, 1955? I actually went through what changes were done in the market that caused the data to be a little skewed. If the average person decides to look back as far as they can, they're likely getting the wrong data. I see it all the time. It's a sad mistake. Anyways, let's talk about what we're focused on here and stay on track. Yesterday, 5.89%. Here's every other loss going back to, 1955, almost 70 years, to see what happens in the stock market going forward. So first, we want you to know there are 28 other times where the stock market actually has fallen more than 5% in 1 day. What's interesting is I highlighted all of the ones that happened in 2020. There's 5 of them already in 2020. That's rivaling the volatility that we saw in 2008, where naturally, if you were around, you know, it was wild. Right? We had a lot of wild days in there. So not quite a record, but currently second best. We've talked about this before, where Mondays happen to be the days where we tend to see the biggest declines. So Mondays, I highlighted in bold just to show you all of the Mondays. In fact, it's 11 of them that have lost over 5% all in 1 day. Now, the reason I said earlier that the stock market, although it was higher today, it underperformed its average was because of this. If you look going forward after every single one of those 5% days, the ones that you can, the ones that have happened this year so far, we can't go 3 months out. We can't go 6 months out because they haven't happened yet. But anyways, if you look at all of those, say, okay, at a 5% gain, we always like to say, what happens the next day? That's one of the fun things we like to do, just out of curiosity, what happens? Well, if you look at the chart here, the average gain the next day is 2.14%. And almost every time the stock market is higher. 81% of the time the stock market actually trades higher the next day after losing 5% or more on the downside. We did not get an average 2.14%. We obviously were positive. The odds are we were going to be positive today, but we didn't quite meet the average. We really didn't come close to it. It was well under half of meeting the average there. So that highlighting, in addition to highlighting what I did earlier with the sell into the rally news or moves that we had there, gives you an idea that this wasn't an excited day for people to come buy the market. In fact, maybe I got 2 emails from people that said, do you think I should buy the market? And I had to turn them away. Maybe 2. Might have been the same person. But so not a lot of people asking that question today, and I think you all get it. Anyways, looking forward here, we went 1 week out, 1 month out, 3 months out, 6 months, and 1 year. What I want you to notice is as you get into this midterm time period, well, short term for the week, but as you get into the month and 3 month time period, yeah, it looks like the average gains are positive, but the percentage of time that they're positive is actually, it decreases a little bit. It gets kind of weak there. If you look at 1 week out, not really good. A month out, getting closer to 50%. 3 months out, getting more of a coin flip there. Although when it is positive, it tends to be a pretty decent move there for that 1 day. When the days following are negative or moving out further when things are negative there, there's only one time where we fell double digits. That was actually Black Friday because if you go back, here it is right here. Ta-da! Where do we go? Oh, I put the day on there wrong. Yeah, right there. Okay, so, oops, wrong way. There you go. So the one that skews this one here is looking out in this 3 to 6 month time period because that's the Black Friday thing where we fell 20%. So you'd want to do more, maybe a median scan on this one if you were trying to see more specifically. Just like to share the data with you. Something cool maybe you can look at there. Hey, anyways, our FinTips videos this week were rather interesting. I hope you'll check them out. We had how to build a dividend portfolio on Monday in returns as it pertains to volatility as well. I think I'm going to expand on that for you guys, maybe by going into individual stocks and comparing them to each other. So we'll have some fun with that one if you watch our YouTube channel, FinTips, of course. How much to invest if you're 42 and specifically where to invest it. We did that on Wednesday. And today we did thematic ETFs which I just thought I'd try, see what you guys thought about that. So hopefully you find that interesting. Our class last night for customers was what happens to the market's performance following an official label of a recession. So hopefully that helps you out. And if you're one of our customers, you can check it out. All right, let's go to our sector breakdown here for the day, and I will dive in just briefly into some of the things that happened. If we go over to the overall sectors today, you have energy. So energy was down 13% just this week, right? And, look, I mean, it's a pretty nasty day there, or week. You can kind of see that on the charts there. Tech was the best one. It was only down 3% on the week, but every single sector lower on the week, actually. If we look into today, you had XLRE was the leader, up 3.16% today. The biggest contributors, by the way, were your cell towers and your tech REITs. Right? So the names that have been leading the way continue to lead the way. Prologis, right? This is in the data center space, 4% higher on the day. American Tower, it's going to be obviously cell tower there. And Crown Castle International, 2.25% on the day. All good there. Simon Property Group stopped pulling back, right? So got a little bit of a supportish play off of the prior highs there, added 5.6% on the day. If we go over to financials today, they also stopped pulling back and did pretty good at erasing most of yesterday's intraday performance, up 3% on the day. Citi was the biggest contributor and the biggest gainer out of the group. So not only did it have the most weight going in, it also was the biggest gainer with about an 8% gain on the day. Look, JP Morgan was not too bad, 2.7%. Bank of America, these all did well, but they all kind of were fighting for the second, third, and fourth place there. Wells Fargo with second place, 4.4%. Go over to basic materials real quick. Small gain, but continuing to slice around by the 200-day moving average. Unable to recapture that today. About an 8% loss on the week. Utilities pulled back to the 50-day moving average and held exactly perfectly there. This was the worst, one of the worst out of the group. Just a small loss. Really wasn't that big of a deal there. Though this sector is undervalued from a few months ago, 4 months ago. Remember that slide that I shared with you here, this one here? So we talked about this the other day. Utilities undervalued in the background is current, and the solid black is where it was 4 months ago. So it's a comparison of 4 months ago. Although it's undervalued over the last 4 months, it's a really difficult place to try to pick stocks. I'll give you that. Check this out. So you've got AES Corp. You say, okay, well, look, I had a good day today. It pulled back. It's just in the middle of this choppy mess. So it makes it a real tough sector to buy. Edison International, EIX is a ticker symbol. Same thing. It's kind of pulled back into chop land, really. Con Edison now looking more like it's going to kind of be stuck in this downtrend here just a little bit. But the good news is you got things like Nextera Energy. This is your relative strength, right? These have held up. They are now trending higher. They are above their 200-day moving average. They are showing relative strength compared to the overall sector, just a little bit there. So NEE is a ticker symbol there. If that helps you there. Also, a couple of those names, right, they make up a large chunk of this ETF, so that may help you there if you're interested in that. Moving on. Consumer staples there we go, right on the 50-day moving average, pretty much even on the day. It tried, but still on the lower end of the sectors today. For every stock higher, like a COTY, added 6% on the day. Kraft Heinz, happy to see that one moving a little bit higher on the day, or even Tyson, despite the chicken pricing thing they did there, up 4% on the day. For every stock that was higher, there unfortunately were stocks that were lower. You got Kroger moving lower on the day, Walmart down 2% on the day, below the 200-day moving average, and so it was that tug of war that we've been seeing, unfortunately. No tug of war in the Jets ETF. If you like that one, up 10% on the day. Some standouts there would be Spirit Airlines, up 17%, one of the better performers out of the group. Southwest Airlines, 10%, all of them. Double-digit gains there, 16% for American Airlines. These are wild stocks. Credit Suisse actually said that Spirit Airlines was a costly stock. So they don't agree. They think it's a costly stock there. But nonetheless, they were higher. You got oil on the day up about 0.5%. Down about 0.5%. 36.24 a barrel off the highs of the week. So a little bit of a rounding pattern there as it starts to pull back maybe just a little bit. And you look at gold. You got gold down $2. Not a big day for gold. Just kind of a flat day in the middle of this range. 17.37 an ounce. And silver, by the way, we don't look at it often. Had a bigger day today. Down 2%, 2.2%. That one kind of starting to round off here at this series of highs. So I don't know where that one goes, but maybe one that we'll continue to look at. All right, if we look at our technical breakdown here for the day, there's not a whole lot I'm going to be able to share with you. In fact, I've got Adobe as the one stock on the new 52-week high list, erasing all of yesterday's losses. That's impressive. They had earnings. The stock is up 17% year to date. Adobe's massively strong uptrend continues to move on there. And that's it, right? You've got 0 new lows on the day, on the week. Over the last 4 weeks, there's been 0 new lows as the market's been at highs, and that's what you have there. So not a lot going on. And then for some of the technical stocks we're looking at, Vertex, we've been talking about raising a stop loss. Technically, it wouldn't have stopped out yet, but you've got to be looking at risk on that one versus reward. There are times where you say risk is more important than reward, and this is one of those times where you're saying, I'm now focused on the risk versus how much can I squeeze out of that one. Good lesson throughout the week, by the way. Autodesk, I would say, look, 2 days ago, we suggested this was extended and maybe a counter trend play. The very next day falls over 7%. Do you have something in your trading plan, if you're a short-term or active trader, that says if I make money faster, I will close the position faster, right? So a lot of times you take a trade, you're hoping to make 5%. I don't know, whatever you're looking to make, so many dollars, so many percent, whatever. If you make it in a 1-day time period, do you shoot for more or do you just close the trade and move on? I'm the kind that would just move on, right? If you are shooting for 5% and you find that you normally are right within a couple week period, but all of a sudden it's taken a month, do you close the trade or do you give it more time? So that's one part of a trading plan you may want to focus on there. I point that out with Autodesk because it was a 1-day hit, right? It was just such a quick mover there. Maybe there should be something that allows you to take a little profit. I'm just saying. Can't tell you what to do. All right, let's go over to stocks in the news and we'll wrap this thing up. Get out of your way here. So just a couple. Churchill Downs, if it pops up, wouldn't come up earlier. Yeah, there we go. 4.4% higher on the day. They're going to be opening 5 locations next week, I believe was when they said that. And Hertz, good on them. Like if I'm the company here, like this is a smart decision. I don't like this for the shareholder. Stock was up higher today. The company has recognized the recent pop in their stock price thanks to the rookie retail traders out there. And they've decided, rather than get excited about that, they are going to sell $1 billion worth of shares to dilute your shares so that they can raise some money and maybe work their way out of bankruptcy thanks to all of the novices that decided to buy their stock. So I don't know. Where do you land on that one? Anyways, a couple others here. You just got Prologis. We talked about it earlier. The stronger REIT, they're paying out 58 cents in dividends coming up. Today was ex-dividend day. That's the wrong ticker symbol. Intercontinental Exchange back to the 200-day moving average. They are paying out 30 cents. And then you have Amphenol. I can never say that right, and it sounds like I did that time. Amphenol paying out 25 cents, also at the 200-day moving average. And that's basically all I have for you here today. We'll wrap it up. I do appreciate you guys hanging out and joining us for the class. I hope you learned something, and maybe next time we'll hang out, have a drink, and just kind of chat, on a Friday. We could do that as well. But enjoy your weekend. If you're one of our customers, Notes from Jazz, that comes out tomorrow. We will, of course, be covering all the good stuff in the markets as well as some extra research and data that we've been sharing with you guys. So I hope you enjoy. Have a great rest of your day and have a good weekend. See you later.